We come to Financial Accounting 2 Joint Venture video lectures. So we are discussing about Unit 3 Joint Venture Accounts. First video, definition, features, advantages and disadvantages. Second video, difference between joint venture and consignment, joint venture and partnership. Third video, steps in formation of joint venture and clauses of joint venture. In this video, we'll try to understand journal entries to record the transactions of joint venture. We have to pass journal entries in the books of co-venturers, one co-venturer or all the co-venturers. So that journal entries, later one small problem, we'll understand the journal entries as well as the how to record the journal entries in the books of co-venturers. Okay, students. So fourth video. Definition, it's a temporary partnership, more than two persons engaged to a particular business or venture for a short term. It is called as a joint venture. Venues, possible venues for joint venture, features, advantages, disadvantages, joint venture and consignment. What is partnership? Some of the partnerships between non-profit organizations and corporates. Difference between joint venture and consignment. And 10 best joint ventures, successful, failure, and joint ventures which become to take over. Okay. So before this video, that is third video, process of joint venture are the steps of formation of a joint venture. I explained that is planning of joint venture, partner search and feasibility study. In the planning, first we have to identify the objectives of joint venture. Later we have to find the product which to be sold or service or market in which area we would like to cover, technology decisions, financial requirements, any foreign exchange related issues, and recruitment of labor or workforce, and CBA, cost benefit analysis, as well as a SWOT analysis. This is on the paper planning stage. Next to partner selection. When you are going to take up anybody as a co-venturer or partner, first you have to identify the prospective partners. First you have to inquire who would like to join with you, and later you have to list them and rank them who are the best, and later cross verification, later selection. Next one is feasibility study. So in different areas we have to study the market. Okay, we have to conduct the study, technical study, financial study, market study, social desirability, and management study. These 5 studies we have to conduct, and we have to keep with a report with us, and based on that pros and cons, we have to take a partner or co-venture and start the business. Okay. So another one is execution or decision making. So sometimes it is needed to resolve joint venture. So according to the goals and objective, joint venture may be resolved. So venture is closed, then venture is closed. Automatically, joint venture will be dissolved. If the joint venture failed in achieving the goals of objective agreed upon between the partners, if the two if the two partners or three partners they started the business, but that business is not able to achieve the goals, then also they can dissolve. In between, they thought that joint venture is not profitable. A breach of joint agreement was committed by one partner, and one of the partners became incapable or insolvent, then also joint venture be dissolved. These are the summary of last three videos. Now the yes clause is also explained. Now the methods. Two methods. Here I explained two methods. Before that, joint journal entries in the books of one co-venturer and journal entries in the books of other all co-venturers. So in this methods of joint venture, first method is when separate set of books are maintained, we have to prepare three accounts: joint venture account, co-venturer account, and joint bank account. When separate set of books are not maintained, we have to prepare joint venture account, co-venturers personal accounts. Then we'll close that one. Okay. When each co-venturer record of his own transactions, a separate set of books are not maintained, two methods. One is uh, each co-venturer record all the transactions, or the each co-venturer record the transactions of his own. That is a memorandum joint venture. Okay, journal entries we will see for the method one. So when separate set of books are maintained for journal entries, contribution made by the co-venturers. So whatever the amount they brought into the joint venture business, they open a joint account and will deposit in the name of the person who contributed. That's why joint bank account data to co-venturers account. When the expenses paid through the joint bank, so amount was the process of accounting for the separate set of books is amount is deposited into the joint bank and payment and purchases are made through joint bank, and amount received, final price received is deposited into joint bank, and the amount settled to the co-venturers also through joint bank. So totally joint bank account may be tallied. It has to tally. So when the expenses paid through joint bank account, these expenses are for joint venture. That's why joint venture account data to joint bank account. And the expenses are material supplied by the co-venturers from a private account. So any one of the co-venturer paid from his own pocket or the goods supplied to the joint venture. Joint venture is debited and his account is credited. So when a sale proceeds received, joint bank account data to joint venture account. So amount, the sale proceeds means price or the contract amount received, that amount is deposited into joint bank. That's why joint bank account data to joint venture account. When the collections received by co-venturers, suppose goods sold by any other co-venturer, that money is received by that co-venturer, and amount that to be recorded on his name, co-venturer's personal account data to joint venture account. When assets are taken over by the co-venturer on his name, co-venturer's account data to joint venture account. So instead of assets, sometimes liabilities also taken over by the co-venturers. So when the liabilities are taken over by the co-venturer, joint venture account data to co-venturer's personal account. Profit distribution, joint venture to co-venturer's account. And if loss is there, co-venture to joint venture. Finally, settlement made to the co-venturers. Co-venturers account data to joint bank account. Co-venturers account data to joint bank account. These are the journal entries, 10 reasons. First one is a joint bank account opened. Second one is a second one is a joint venture expenses paid through joint bank. Third one is expenses paid by the co-venturers or goods supplied by the co-venturers. Joint venture to co-venturers account. Then sales amount received, joint bank account data to joint venture account. And if the sales are made by any co-venturer, co-venturer's personal account data to joint venture account. So when the assets taken over, co-venturer to joint venture, liabilities taken over, joint venture to co-venturer. For profit, joint venture to co-venturer account. For loss, co-venturer to joint venture account. Loss in co-venturer. Then final settlement, co-venturer's personal account data to joint bank account. So before and doing the problem, please everybody has to write 2 or 3 times these journal entries and by heart this. Okay. So whenever you are unable to read this one, remember this one. So when I am passing the journal entries and posting the journal entries, you will see the blank screen. Okay, you can't understand. So better you have to write down 2 times or 3 times these journal entries, and it is understand according to the logic. According to the logic, journal entries or you remembered according to the logic, then automatically when I am passing the journal entry, you can easily remember the basic journal entry and adopt or apply according to the replace the name of the co-venturer. Okay, this is method 1. Then coming to the second method. When separate set of books are not allowed, when each co-venturer keep record of all the transactions. Okay, so this is for first method, that is only one co-venturer is recording. So we will pass only journal entries in one co-venturer. If all co-venturers are recording the transactions, we post in the books of all the, we pass these journal entries in the books of all co-venturers. First, we will try to understand the reason and journal entry. When goods supplied to joint venture account data to purchase account. Joint venture expenses paid by the acting co-venturer are on in whom books we are writing. Okay, na? That is joint venture to cash account. When the material supplied or expenses paid for the joint venture by other co-venturers. So joint venture account data to co-venturers personal account. Sales amount received bank to joint venture. Sales made by other co-venturers, co-venturer account data to joint venture. Profit, joint venture account data to profit and loss account and co-venturers personal account. Loss is a reverse journal entry. And amount paid to co-venturers, co-venturer account data to cash account. Very, very simple. Okay, journal entries are very simple. So how to remember? Goods supplied from his own stock. So from the stock, it is we have to credit the purchases because the stock value is reducing or going out. That's why that stock was sent for joint venture. So the entry will be joint venture account data to purchase account. So expenses paid by the co-venturer from his pocket, joint venture account data to cash or bank account. Material supplied and expenses paid by other co-venturer, joint venture account data to other co-venturer's personal account. Sales received, cash account data to or bank account data to joint venture account. And sales made by other co-venturer's personal account data to joint venture account. Profit, joint venture to P&L account and to co-venturer account. Loss, it is reversed, and amount paid to final settlement or closing the co-venturer's personal accounts. Cash or co-venturer's personal account data to joint bank account. Okay, this is method 2 and recorded by in the books of one co-venturer or all co-venturers. All co-venturers. Then in the method 2 only, recording their only their expenses. When each co-venturer record of own transactions only. That is called memorandum joint venture. The goods supplied to joint venture to purchase. When joint venture expenses paid by him, joint venture to cash. When the sales received, if he made sales, cash to joint venture. And when the profit shared, joint venture to profit and loss account. When own share in the joint venture loss, okay, then P&L account data to joint venture account. In case of loss, when cash received from joint venture, cash to joint venture account. When cash remitted to other co-venturer, co-venturer's personal account data to cash account. When the amount is paid to co-venturer, final settlement amount is paid to co-venturer, then joint venture to bank account. When the received from the co-venturer, joint bank account or cash or bank account data to joint venture account. Journal entries are very simple. Very simple. We have to understand. Okay. So we will try to take one problem and we will try to understand that. Okay, students. Right. Right. I am reading the problem. Ali of Lahore and Bilal of Karachi entered into joint venture for the sale of consignment of goods at March 2018. Profit and losses to be shared equally. Ali paid rupees 10,000 for goods purchase and consigned to Bilal for sale. Okay. So in the books of Ali purchased goods for joint venture account data to cash account. Amount is 10,000. Goods purchased for JV. Right. Ali paid for rupees 10,000 for goods purchase and consigned to Bilal for sale. These goods are sent to Bilal. So Bilal is received goods from joint venture account. From where it is received? Ali to Ali account is 10. Goods received for JV. Right. He paid rupees 400 for freight, 350 for packaging, 100 for sundry expenses. We in the sense Ali. 400, 750, 850 is paid for expenses. Entry is joint venture to cash account. Data to cash account. Amount is 850. Joint venture expenses. Okay. Bilal received these goods and paid rupees 600 for upright, 200 for warehouse, and 90 for insurance. It is 890. Joint venture account data too. So for 850 amount, we have to write these, these 850 were paid by Ali. You have to record in his. Amount is 850. Joint venture expense paid by Ali. Okay. In this, Bilal also paid for joint venture. First, we will record in the joint venture account, cash account. What is 890? JV expenses paid. Same joint venture account data to Bilal account. Joint venture account data to Bilal account. Because 890 was paid by Bilal. Eight nine. Joint venture expenses paid by Bilal. Okay, right. Till now, 10,000 goods purchased and supplied, and 850 paid by Ali, and 890 paid by. He sold the whole consignment for 16,000. Who sold? Bilal sold. He is receiving cash. Cash account data to joint venture account. Amount is 16,000. Goods sold. In the books of in the name of Bilal, we have to write record Bilal account to joint venture account. Goods sold by Bilal. Right. So what actually happened, we recorded. Now we have to pass journal entries for. Actually, first method is only in the books of one co-venturer, but for understanding purpose, we are preparing in the books of two people. It is an experience of consignment. Okay, right. So, students, some were complained about against posting. Check how I am posting. Okay. So, I am preparing ledger accounts in the books of ledger accounts. in the books of Ali only. So joint venture account debit side to cash. Joint venture account data to cash account. Amount is 10,000. Next again joint venture account data to cash account. Amount is 850. And the next one is joint venture account data to Bilal account. Joint venture account debit side to Bilal account. Amount is 890. And in Bilal account also by joint venture. By joint venture. Is 890. Next to Bilal account data to joint venture account. Joint venture account. Amount is 16,000. In joint venture account by Bilal. Is 16,000. Okay. Now we will calculate profit. We posted all entries. Check once again, everybody. So joint venture account data to cash 10,000. Joint venture account data to cash 850. Joint venture account data to joint venture account data to Bilal account 890. Posting once again, you please check joint venture account data to cash account, joint venture account debit side to cash 10,000, joint venture account data to cash account, again to cash 850, joint venture account data to Bilal account 890. In Bilal account credit side by joint venture 890. And Bilal account data to joint venture, here it is Bilal account. Bilal account data to joint venture 16,000. And in credit side of joint venture by Bilal account 16,000. Okay. Now we are calculating profit. For 16,000. Okay. So this 4260 we have to distribute to profit and loss account to Bilal account. 50/50. 2130. Will pass journal entry. Our profit will pass journal entry. Joint venture account data. profit and loss account, to Bilal account. So profit is 42360. 2130. 2130 to Bilal. 2130 to Ali. JV profit distributed equally. Same entry we can pass here. So instead of profit and loss account, here instead of Bilal, we have to write Ali. Right. Now we will close the account of, we'll post the profit of Ali. Right. Into engine. You are it. So Bilal is credit side by joint venture. Two one three zero. Here it is 16,000 by 80. 30. 9 plus 3, 12. 2. 2 plus 1, 3. 7. And 3. 13,007. Okay. So this also will pass generate. How much to be received from Bilal? 13,780. 13,780. That is bank account data. To join to Bilal account. 10,000. Final amount received. O Ventures account. Detailed. Okay. This may be if we prepared in his books, Ali account, automatically it will tell. Ali account. Ali account to bank. One three seven eight zero. O Ventures account set it. not required for us. These are the entries which we are passing here. So one more co-venturer is, what is his name? Ali. In the books of Bilal. Okay, we are doing method, second method. Journal entries in the books of all co-venturers. So joint venture by Ali. By joint 2130 joint venture. Is 1 to 980. Each 60. This amount is 1 to 9. Right. Here we have to write Ali account data to bank account. So this problem we did instead of one co-venturer, we did in the books of two co-venturers, like our like our consignment in the books of consigner and consignee. We prepared in the books of two people. Okay, for understanding purpose. Check with the posting on your notebook, not on system. Okay, students. Bye.